Hello all, I hope you are doing well in these, I'm going to go straight in with a buzzword, these unprecedented times. Welcome to the Fintech Finance Virtual Arena where we're hosting you today.
Thanks for having me, appreciate it, yes.
There he is right away. Here is Joon Kim from BNY Mellon. How are you doing, Joon?
Great, thanks Ali, great having me here and thanks for your time. And looking forward to 30 minutes of a discussion with you today.
And you're in New York in the BNY Mellon office?
Yes, we're in, currently we're all working, most of us are working out of home. So my head office is in New York City and I'm currently residing in, working from home in the state of New Jersey in the United States. Yes.
I have to say, I was lucky enough to visit your office in the before times and see all the, not memorabilia, but see all the artifacts from the Alexander Hamilton days.
Correct. So we hopefully will, hopefully the pandemic will ease off, and we're really hoping that we'll get to some degree of a normalcy soon. So we're looking forward to getting back to the office, but right now it's a little bit unclear as to when that will be, right?
Absolutely, but that doesn't stop what we're going to be talking about today, which is, well, trade finance. What first of all, off the bat, what are some of the defining characteristics pre-COVID of the lending industry, but particularly trade finance in the pre-COVID world?
Yeah, so it's kind of interesting. If you think about pre-COVID, we were already at a low interest rate environment to begin with, and we didn't really think it could go actually lower. But after the post-pandemic, you see even a lower interest rate environment. So pre-COVID, I think, the business, the overall trade finance volumes and international transactions that were taking place was very active. A number of banks were competing. It was a very competitive landscape, and the volumes were there. And the overall growth was going very strong until the pandemic hit. So that would be the typical characteristics of pre-COVID, but obviously lots of things have changed at post-COVID. That interest rate environment has gone even lower. And the disruption of supply chain of the international business has gone down substantially. And then there is a little bit of the geopolitical tension as well amongst the countries themselves. So we are facing a challenging times, to say the least, today. Right?
So when it comes to trade finance, obviously at the moment, there's a lot of disruption happening with the supply chains all around the world. And then the knock-on effect of that in terms of there all seems to be quite a lot of I want to say nationalism, but I mean more in terms of trade. There's a lot of focus internally. What does that mean for the trade finance landscape on a global scale?
Yeah, so I think how we look at it is obviously you may be aware, trade finance is one area where it's a very still paper intensive business. So in order for a transaction to be completed between the two parties, they require original documents and etc. So it is classified as a somewhat of a very manual intensive process. But as a result of the pandemic where everybody's working from home and unable to retrieve and send and pick up these original documents for transacting businesses, it created a huge challenge, right? So the Main Street look that I look for is the importance of BCP, business continuity, that people really need to do not take this for granted, that you have a business continuity plan in case of such an event, similar events do occur. And then the second point you made, I think the disruption of the supply chain is telling us that maybe perhaps one party or one country is depending on the other countries to create that supply chain. So therefore, once there is a breakdown of that, if there is a disruption, it becomes very difficult to create the transactions to be completed. So that's why I think there is more emphasis creating a more of a supply chain landscape within the domestic side. So I wouldn't necessarily call it a nationalism, but it would be called a more of a, you have a contingent plans out there that if the supplier disruption takes place in another corridor, you have an alternative supply chain options that exist within the same country. So I think there is going to be a lot of new look. And I think that's part of the reason as to why people are really focusing intensely in terms of how we can create more of an operational efficiencies going forward. Right?
Absolutely. We are at the moment in Cybos season. I remember my first ever Cybos was 2015, and it was the time where blockchain had arrived and people were talking about DLT, and it seemed that trade finance was an area that still, again, very paper based, that blockchain was going to come in and effectively solve that. But it hasn't been as black and white as that. It hasn't just happened overnight. Why do you think that is? Why do you think that as a sort of specific area, it's been a bit slower than others when it comes to digital transformation? And do you think the pandemic is going to accelerate this?
The short answer is definitely yes, it should accelerate. As I alluded at the beginning, it is a very paper-intensive business. So if you think about 2 years you were referring to, the fintechs and et cetera, they all came in with an initiative. Initially started with the payment side, right? But they recognized the payment side is pretty much well automated. It uses a lot of technologies to settle the payments and the incoming, outgoing, as well as the incoming receipts. And then they realized that trade finance was one area was very, very labor intensive, paper intensive. So I think, the more of the fintechs are now looking at the space to create a solutions, how you digitize the documents and how we can create more of a digital solution rather than a paper solution. So there are two components, I think, that we are. So one of the things that we have to think about is the fintech initially, when they came on, the banks, the financial institutions thought of it as a more of a competitor. But today, I think it's a much more of a collaboration and partnership. So many banks are collaborating with the fintechs to how we can create that a digital journey that everybody's looking for. A blockchain component or the DLT component is still a little bit more on the pilot cases because the part of the reason is that there are multiple parties involved in the trade finance side, right? So essentially everybody has to be on board in order to those blockchain digital DLT type of transactions to occur. But yet at the same time, there are a number of other innovations and digital framework that's taking place within the trade finance, utilizing of the machine learning, OCR, the optical character recognitions, so that we convert those paper documents into a digital format, and the machines are able to process those transactions without the manual intervention. So those are some of the critical areas that many banks, including us, are looking at. I think that's in the long run, the journey that we're taking is going to create a much more streamlined process, which will eventually enhance the client experience.
I always find it interesting that all payments is simply a transaction of information, of data, and it's technically speaking quite a small amount of information. You can log on to your Netflix account and or Amazon Prime and be downloading a many gigabyte 4K video file from the other side of the world, and it arrive and you process that information very quickly. But it still seems that on the payment side, on the trade finance side, even though it's a much smaller file, it takes quite a long time to reconcile that and kind of make sure everything is lined up. where can machine learning and artificial intelligence be used to bring that speed up to other verticals and other niches?
So I think it's an excellent question. So I would say, 3-4 years ago, or all in the past years, all banks or the banks typically have all the data. They have lots of data. The challenge has been, what do you actually do with the data, right? So how do you create the analytics that's required, that's either going to create operational efficiency or enhance client experience, or whether we need to create a new products or services or modify or enhance, right? So lots of progress has been made, and I think most of the banks are really keen on data analytics, right? So now it's the gathering of the data, how you create it and to utilize those data into the analytics that's going to be creating value, right? So a number of initiatives are taking place, and then that's where the utilization of such a technology as the OCR machine learnings to understand what the client's behaviors are. So whether it's an attrition, why are they not using a particular service? What's the reason as to why a particular client is using this particular type of a service? So we do a further analytics behind that to really create a solutions for the client experience. And I think this is not just a one-way initiative, but I think what's important to note here is that when you're talking about a wholesale banking, and I think, Ali, you mentioned when it's a consumer to individual, the technology is faster. But when you're dealing with the large institutions and the large corporates, adapting to those digital type of an innovation or data analytics becomes a little bit more challenging because they are used to a certain ways of doing the business. But the journey is there, and I think this is one key initiative for many of the banks that I speak of and discuss with.
It does seem that looking at these sort of kind of, again, reconciliations, we're starting to see the. I'm reading Jeff Bezos' book at the moment, but the Bezonomics term of the flywheel is starting to turn. We're starting to obviously get feedback and then become more efficient with how we're using that kind of information. What does that actually mean for these wholesale customers? What does that free them up to do? And what are the opportunities associated with that?
Yeah, so it's an excellent question. So depending on the client's core objective, you can have different variations, right? So on the finance side, the data analytics is going to be much more closer to the optimization of the working capital, right? So if a particular corporate or clients are paying out later than when they receive funds, they're optimizing their working capital. But one of the things that many banks are trying to do is understand the balance sheet perspective of the corporates to see how they can improve the working capital. On the processing side, it's really about looking at their transactions. So if there are I'll give you one example. If they're paying certain fees, and they've been paying those fees, and they think that's the fees that they ought to pay, but yet at the same time, another bank may be looking at the analytics and to say, if you think about it, if you just fix one of these things based on the analytics, you're making an error on one particular common area. And if you were to fix that, you no longer have to pay these fees, right? Because it's, you're going into a straight through format on the trade side. So once a bank is able to create the analytics and provide that value proposition to a client, they pay less to a bank, yet at the same time, this bank is telling us to improve this. So there is a mutual benefit to both parties. And that becomes really where the corporates and the banks will depend on the advisory of the analytics. So that can create a positive experience on both sides, which ultimately means better efficiency, a better cost structure. And that's really the journey I think that we're all trying to take. Right?
Absolutely. So for example, with you guys at BNY Mellon, that would just increase your bottom line. Well, every single time that the analytics is run, it should get more and more efficient.
Correct. So then it allows us to have a better engagement with the clients. And when you do, rather than I say a product sell or a sales pitch, you go into this type of a solution structuring type of a discussion. You can get into a more of a strategic discussion as to what the solutions that the clients are looking for. And this is where I think the data analytics, the data digitization becomes really, really critical.
Excellent. With banking as a whole, there was a period 10, 15 years ago where everything was behind nice high castle walls. You had your own on-prem data farms, you had teams of developers, and it was very hidden behind high walls. And all of a sudden, the banks now are really starting to become less of a castle and a lot more of a forest. They're opening up and working much more as an ecosystem. What are some of the work you're doing within, or what is BNY Mellon's obviously position within this ecosystem? And how does this sort of partnership mentality, what does that mean on the trade finance side of things?
Right. So I think what you just stated was beautifully articulated. So I think we look at it at the high level. Everybody wants to become bank agnostic, meaning the clients do not want to use and log into multiple systems and segregate the different types of experience depending on what platforms are being provided on a proprietary basis. So they want to become bank agnostic. So I want to have a single login to process where all transactions can go through the multiple banks. So this is where really the fintechs come into play. And I think many of the banks are now thinking about, rather than building its own platform or products and services, there are certain aspects of it you have to build. But when it comes to the client portal aspect in particular, there is no real reason to create something and not knowing whether that's going to be applicable 3-4 years down the road. So this is where the importance of collaborating with a fintech. Fintech creates its own set of consortium. So many banks who are in that consortium will share a similar thoughts in terms of what needs to be done so that the clients have a much better experience rather than doing multiple types of different process for the same transaction. So this is where the fintech collaborations become very important. And I think the banks are going more towards, rather than building, depending on the building side to the technology specialist. And the banks are providing the services and enhancing the client experience, leveraging those partnerships that we have with the fintech companies. So that's why I said at the beginning, initially when we saw the fintechs coming in, we said, are they trying to take away portion of the bank's wallet per se? But it's, in fact, yeah, there could be a little bit of that. But the overall theme is that the collaboration has become a critical component, and it's a must, right? So if we don't do that, and we go back to the old legacy ways of corporates and the banks doing transactions on a bilateral basis, on a paper-to-paper basis, that's not a sustainable solution for the future, and that's why I think having that collaborative effort with fintech companies become essential.
It also allows you guys at the bank to focus on what you're good at, which is banking. Fintech's got no interest in doing banking. That's your guys' job.
Correct. So I absolutely right. So It's really about our perspective is, if you look at trade finance side, Ali, you have traditional trade terminologies you've heard in the past of letters of credit, collections, and etc. But the trend is as such, traditional finance will exist, but many are moving into the open account space. More well-known terminology of supply chain financing, receivable financing, open account financing. So in order for, and there is a number of working capital solutions that the banks are in a position to provide to the corporates, whether it's a large corporate, SME, or the middle market, depending on what segment that each banks provide. To your point, this is where we can start creating solutions and think about what needs to be done to those, rather than focusing on the features and the functionality of the technology aspect of it. So I think, to your point, I totally agree. I mean, we can focus better and optimize our resources. We're focusing on the client's needs.
Excellent. Well, all right, Joon, it's crystal ball time. So now that we, obviously, in a world where digital is becoming first, there's a lot of opportunities in terms of technology and partnerships. Where do you see trade finance going in the next 5 years? I mean, the culture has shifted to be very digital because of COVID-19. What's in the crystal ball? Where do you see the industry heading?
So to a certain extent, you will definitely move. There is a huge effort in this. And what I was going to say, as a result of this unfortunate pandemic, people are beginning to recognize this, that the innovation has to take place faster. So the focus has marginally increased tremendously. Had the pandemic did not occur, it could have been typical BAU. We'll do it the way it is. But as a result of the various different types of an example, right? The business continuity plan, the office is shutting down. People cannot pick up a paper, documents, and etc., has created a common alignment amongst the banking industry as to what's needed for us to move this into a next level. So this is a crystal ball perspective. The innovation and the trade finance will continue to take place. Some of the innovations will be easier than the others. However, we do have to work with the various regulators and etc. To create a streamlined structure so that everybody has an experience that is going to be much better than today. Crystal ball is, 5 years from today, I think we will have a very different types of discussion where e-signature, digitizing documents, sharing of the digitized documents amongst the banks. And then our hope is that the paper portion will be substantially reduced, which will create a much better efficiency and enhance the client experience.
Brilliant, excellent. Cool, thank you so much for that, Joon. That's been very insightful. Where's the best place to reach out for you? Where can people find out more about yourself and the work you're doing with trade finance?
So you can do social media is very popular. Joon Kim, BNY Mellon. I manage the global trade finance product and distribution and portfolio for transaction banking at BNY Mellon. If there are any questions, we can link in and write to me on my emails, and I look forward to further engagement with the various stakeholders who are keen on doing more on the international trade finance side. So thank you for your time.